Want to stick with the markets now and bring in Keith Bliss, President of Capital2Market. Keith, good to see you as always. So we've got investors digesting the vaccine news, the vaccine rollout here in the U.S. yesterday. What do you think is the next big catalyst for this market as we head into 2021?
Well, I think the next big catalyst as we head into 2021 actually is going to be what happens with the Georgia Senate races. If the Democrats take both of those seats, then they will have the majority in the Senate, the majority in the House, and of course they'll have the White House with Biden's inauguration that's going to occur on January 20th. If Sonny Perdue and Kelly Loeffler, though, retain their seats, then that, of course, will make a blocked government, if you will, a gridlocked government, with the Senate having a lot of power to block any bills that come out of the House before they even reach the White House. And I think that's what investors in the market are really counting on. They're hedging their bets a little bit. You can see it in the price action, depending upon some of the news that comes out of Georgia. But as you no doubt have been reporting on Yahoo Finance and other outlets, the amount of money and going into the Georgia Senate races and the amount of people going down there to campaign, it's really tough to call right now. But the market is clearly signaling that it suspects that, again, Senators Perdue and Loeffler will retain their seats.
What about the Federal Reserve as a catalyst? I mean, their last meeting of the year is going to wrap up on Wednesday. Is there anything that the Fed chief can say at this point that would move the market in a material way in either direction?
Well, I don't really think so at this point in time. The only direction I think he could move it would be to take some of the steam out of it. And you know what? Maybe Jay Powell will do that. He's been pretty savvy with using his bully pulpit to jawbone the market and get it to behave in certain ways when he's really run out of policy tools. I mean, when you think about it, he's already signaled, over the summer that the Fed is going to keep short-term interest rates anchored near zero through 2023. So that's one policy tool that most investors and traders have basically taken off the table. Then you have the extraordinary liquidity programs that they could implement or take away at a certain period of time. But I think, as we start to recover, as the markets are staying relatively frothy here, which of course, as we know, is one of the wealth effects that we really need as we're still, climbing out of this hole that was created with the pandemic. I really don't suspect that they're going to say anything to move the markets all that much. Again, we'll wait until we get into 2021. We'll start tracking what the economic developments are looking. The economic activity, by the way, has not been bad since we hit the real trough after the pandemic. So I'm sure the Fed is watching it. Interest rates are going to go nowhere, and the only way they're going to signal is probably negatively. But I don't anticipate that to happen. But that would be the only way it would do. I don't think it will provide a catalyst to push the markets forward to newer highs. I think the markets will do that on their own as money continues to flood into U.S. equities and global equities.
When you look at the market action now we're in mid-December, and we're coming off of the best November, the best month for the stock market in decades. And a lot of analysts were saying, look, don't expect great things from December. People are going to want to start to take some money off the table. We really haven't seen that in a meaningful way. Are you surprised, I guess, by this market's resiliency?
Yeah, no, not really, because again, you've heard me say it probably going back 5 years now, since you and I have been going on the air to get together in a world where you see the policy prescriptions from the monetary authorities, as well as many of the larger governments around the globe, really just flooding the market with liquidity, artificially suppressing interest rates, global interest rates, but certainly in the biggest markets, which would be the EU and the United States, there really is no other place to put your money to gain a return, a market return that's going to outpace any kind of price compression that you would have, price erosion that you would have in the general economy. That is equity. So yeah, I realize November was an incredible month, the best we've ever seen. But also remember, November, December, seasonally, no matter what the year is, seasonally, they are always the two best months of the year. December, I don't think we're going to have the same sort of gains that we saw in November, but I do expect it to be up. And one of the other things that I think are really important to look at, Alexis. I kind of beat the dead horse about this, but you must keep an eye on the Russell 2000 index. And that is the index which really signals what investors and traders think about the overall U.S. economy. And the Russell has really rallied the last 2 months and is now the second best performing year to date of the major indexes. It's now, sped past the Dow, sped past the S&P after lagging for many, many months. Of course, it's not going to catch the NASDAQ composite, which is up, 35, 37% year to date. But that to me is the real indicator of what traders, investors, and those that dabble in the market really think about it and where they're going to keep their money. They're just going to keep it in the market, and therefore it's not going to come down. It's still going to have good performance in December.
Now, those small cap stocks reminded us they are there. They came roaring back in 2020. Yeah. Keith Bliss, president of Capital2Markets, great to see you. Thanks for joining us.